Glad to know you're still with us. And very quickly, we're doing a comparative analysis of Tier 1 banks' half-year result. We start with the turnover, and we are looking at their 2022 half-year result against 2021 half-year result, and then we'll look at the percentage change. For FBN Holdings, 359.31 billion naira. That was in 2022. And in 2021, 293.59 billion naira. The percentage change, 22.38. And then for United Bank for Africa, 372.36 billion naira in 2022. In 2021, 316.04 billion naira. The percentage change, 17.82. For Access Bank, 591.80 billion naira. And 2021, 450.62 billion naira. Percentage change, 31.33. Zenith Bank, 404.79 billion naira. 2021, 345.56 billion naira. Percentage change, 17.14. For the Trust Bank, 239.29 billion naira in 2022 half year. In 2021 half year, 207.91 billion naira. The percentage change being 15.09. Well, that's what we have for the turnover. I'd like to start with you, Mr. Garba. Talk to us about what you feel about this particular result.
Well, it is very clear to all of us and to the exchange that now we have a clear leader, and that leader is Access Bank. How they
yes,
yes, with this turnover, no any other bank dream to match with them. If you want to go there, you need to follow the same suit. You have to acquire both internally and externally. And that's what makes the differences very clear. And it shows to all of us that whoever wants to be bigger, you need to look inward and outside. And now it is a testimony that to look at it, almost 600 billion for Havia. So we see a bank that's going to declare a trillion turnover. No any bank much to see. We all know the source of Access Bank. They were an offshoot of GT, but look at where GT is and where Access Bank is today. So it is very clear we have a leader, and it shows that you cannot remain Nigeria. You have to go outside, because we can see the same impact in the UBA. Nobody dreamed that UBA will match with First Bank, but today is another story. UBA have gone outside and acquire, and today you can see their position, and therefore it is left for the rest. If you want to do the same, you have to follow the same route. Otherwise, it's a no-go area that it's just a matter of time. Even UBA will come and surpass the rest of the other Tier 1 banks. But all in all, it shows that despite the inflation, despite the challenge of the economy, they all show double-digit growth by the 5-tier banks, and this is a welcome development for the industry.
Okay. All right, thank you so much. Well, very quickly, before we go to profit after tax, I'd like to just share your thought in less than 1 minute.
Yeah, I would say the banks are, with the figures, they are relevant in terms of, the situation in the economy. I would say these are good numbers to show that the banks are really doing well, and most of our banks are showing that, yes, they are stress-free. With this figure we're seeing, and also the business policy of the banks shows that yes, the banks is doing well. And CBN has come out to say that our banks, there's no fear. Numbers can also confirm that these banks have become bigger and stronger. But one thing again that investors should know, that in any economy, the engine room of economy is the banking sector. I mean, if there is recovery in the economy, you also see it in what? In the banking sector activities. If there is also a recession, you will always see it in the banking sector. But we are seeing that now that they are branching out to see, increasing their gross earnings, it tells that there's something going for the banks. Like Alaji have said, probably that different banks in Nigeria have different growing strategy. There are some are still growing organically, some are growing toward merger and acquisition, which has made them Access Bank to stand out in the first tier bank because of the acquisition locally and internationally, because they want to take space and also gain market share. For me now, another bank that even the figure that bank look that they are not in this category is what we call ETI. ETI top line, EcoBank is even higher than the figure for access, but because it is just a class of its own, ETI and the Stanbic, they are standing out. But if you look at the same pattern, ETI, UBA, and Access Bank are operating in the same strategy of having branches in all Africa, domain of African country. It tells you that there's something in. Right. And also, if you also look at the figure for access, go down to the bottom line, you see that if not that Access Bank has operation outside Nigeria, the results have been very fatter, because if you know that what I mean that Nigeria operation profit dropped by about 61% down. Exactly. So but the operation outside Nigeria hold the bank. For me, it tells you that I think I like to say that if you really want to be a leader, go outside you must take a step.
Okay. We have to move. Profit after tax now. Okay. We have I'll start with you for profit after tax. Okay, so for profit after tax, FBN Holdings, we have 56.55 billion naira. That's for FBN Holdings for profits after tax. Okay, and for 56.53 billion naira, that's 2022 H1, 2021 H1, 38.05 billion naira, and the percentage change 48.57. For United Bank for Africa, 70.33 billion naira, 2021 60.58 billion naira. Percentage change 16.10. For Access Bank, 88.73 billion naira. 2021, 86.94 billion naira. Percentage change 2.08. For Zenith Bank, 111.33 billion naira. 2021, 106.12 billion naira. The percentage change 4.91. For GT, 77.56 billion naira 2022 H1, 2021 H1, 79.41 billion naira. The percentage change minus 2.34, and that's because what they had in 2021 is more than what they had in 2022. Okay, so
yes.
Mr. Pakruha.
Well, again, the figures don't tell lies.
Yeah.
The only bank there that we saw they have negative is just only GTB, which is now GTCO. Yes, what I would just say is these are the clear leaders in the banking industry, obviously. And I would just encourage them to continue to do more. But I was so impressed, to find out that these banks that we are looking at, analyzing now, they've all shown responsible banking. And all these banks that we see here are already a member of the United Nations Environmental Protection Fund.
I knew you were going there. I just knew it.
Doing quite well in terms of, taking care of the environment where they are operating. So, because I have said profit for me alone is not just that one P. It has to be the three Ps. When you talk in terms of your people and the environment, the planet, So I went through all that and I saw that all these banks here have signed into the principles of responsible banking, which is key, even in terms of social corporate responsibility. So seeing their numbers here, I'm not too surprised. It shows that these are the leaders. But I would not want to pinpoint any of them that, yes, I will encourage that all of them are leaders. I will just encourage GTCO to continue to do more so that they will have a better result, so that they will not have negative in what they have right now. I
remember one of these days we'll talk about sustainability financing. I know you will like that. Well, moving on very quickly, let's check out EPS and interim dividend. And so for FBN Holdings, 1 naira 58 kobo. And then for UBA, the United Bank for Africa, 2 naira 6 kobo. And then the dividend 20 kobo. For Access Bank, 2 naira 50 kobo, and then the dividend 20 kobo. That's interim dividend. For Zenith Bank, 3 naira 55 kobo being the EPS, and then 30 kobo being the interim dividend. For GT, 2 naira 64 kobo, that is the EPS, and 30 kobo being the interim dividend. Mr. Garba, talk to us about this.
Well, it is very clear to see that during inflation, the financial sectors are not doing very well. Because when you look at their earning and the dividend they pay, you see that the tier 2 perform much better than tier 1. Because if you go and check the performance of Stanbic, the performance of Fidelity Bank, you will see that ETI, they are much higher, better than this. So that means the tier 1 couldn't be able to manage their cost. Because when you cannot manage your costs, you are likely going to declare this. Look at the gross.
All right, I guess we're having a connectivity issue there. If you can hear me, please go ahead, Mr. Garba. All right, I guess the issue is still persisting. Well, very quickly, Mr. Omodion, let's have you talk about that, because I mean it's an important point you raised, talking about their cost, a lot going into their cost, and how that the tier 2 banks for him probably have done better in managing that. Let's have your thought.
Actually, for an analyst or for investors to look at a company performance, I told you earlier that it's not only just looking at the top line and the bottom line. You want to know what is between the top line and the bottom line, which is the cost of, for now in the banking sector, your cost of the interest income you're having, then the cost of collecting the fees and commission also reflect on what at the end of that the bottom line. And not knowing that, don't forget that this high cost of diesel has also eaten into banking, because they open from 8 to 5, 4. All these also increase the cost of operation, and also being an inflationary environment, we're seeing already reflecting. But what will make it easier for investors to know, go and look at all these bank profit margin. They all decline from what they had in 2021. Even there's improvement in their top line, but profit margin, that is that cost has increased to reflect why we are seeing a decline in their profit after tax, in their profit margin. For me, it's clear to know that what Laji said is very clear, that if you look at some second-tier banks have done well, as I mentioned ETI before now, go and check their numbers feel or better look at what that means. These big names has big expenses too, because they have more spread, they are everywhere for that. That is also, but I believe that in terms of payout, they remain the best. Why? Because look at what they are paying at the end of the year. If you look at the dividend for Zenith Bank and GT Code, you can see that it's very, very attractive at this point. Zenith Bank have gone below 20 naira at today. Then that's what GTB, and they are paying almost above 3 naira 20 kobo or 10 naira 10 kobo or 3.10 exactly for dividend. The yield already is at about 15%. That means for you as an investor analyst, look at where can I edge against it. Knowing that banking sector is the engine of the economy, that means they are women in business, because they drive the economy. That means they can't easily go down. So for you to say, and that's why every investor coming from many parts of the world want to look at where is well regulated. Because of CBN, central bank is also looking at the banks. You feel more safe to play in the banking sector. All
right, and moving on, we'll look at the PE ratio very quickly. FBN Holdings 6.98, UBA 3.45, Access Bank 3.54, Zenith Bank 6.20, and then for GT we have 7.65. And also we take the book value per share. We just try to take the two together. So for FBN book value per share, 24 naira 70 kobo, UBA 23 naira 5 kobo, Access Bank 30 naira 18 kobo, Zenith Bank 14 naira 49 kobo, and then GT 28 naira 73 kobo. So let's have your thoughts on that.
What I would just say, looking at the book value, say most of all these banking stocks are underpriced. They are underpriced. They are undervalued. So for investors who have not keyed into, I think this is the time they should key into some of these companies. But just take a typical example. Look at Zenith Bank. What is the book value per share? What is it there?
40 naira.
And what's the current market price as at today? About 19 naira 75 kobo. So you can see that these banks
more than 100%,
undervalued.
Margin of safety.
Exactly. So I would advise discerning investors to look at this banking stock and take position there.
All right. Okay, very quickly, you want to say something? Okay. Well, very quickly, let's go to profit margin, and I'll have Mr. Garba talk to us about the profit margin. Nice one, Mr. Fakroha. So for FBN Holdings, 15.73, for UBA, 18.89, for Access Bank, 14.99, for Zenith Bank, 27.50, for GT, 32.41. Mr. Garba, let's have your thought.
Yes, in terms of profit margin, they are just good to go. Yes. All of them, they have double digit. And what shows that investors should go for the banking shares, because their profit margin so much that compared to what they can make 32 kobo.
All right, I guess we're having difficulty hearing him. If you can hear me, do go ahead, Mr. Garba. Okay, Mr. Omodion, let's have you there.
Yeah, actually, I said about the profit margin before now that as far as they are above 15%, for imagine good anywhere in the world. But below it, but I see that most of them are really looking good. For me, it's a good one for the banking sector. It shows that they are well run. That means their risk management and the cost efficient is okay. But I can see the impact of decline from 20 to 20 because of what increase in cost of the environment, inflation, and also cost of this and others. For me, like you just said, I've said earlier, for those that really want to educate inflation, there are some banking stuff you can use also to put your portfolio. Why is it good that you are already buying here at this current price? Dividend yield is already about 15%. If by end of the year they appreciate either by 20% again, you are far ahead of what? Ahead of inflation. If they appreciate by 10% plus your dividend yield of 15%, that's about 25% above the inflation. This time is no way to just be in the market. You need to say, how can I hedge against what? Inflation, to protect my hard-earned money and also grow it a little bit. That's why you need to look for defensive stock and do cyclical stock and make your decision and hold your portfolio.
You know what I like about Analyst Hangouts? The fact that we make people understand that you don't just look at what's the dividend, 7 naira. Oh, it's more. No. What's the dividend, 20 kobo? Oh, no, it's not. You have to look at other variables which will help you better understand the numbers, and that's exactly what you have done.
That's why you need to plan your trade and trade your plan.
Okay, so in wrapping up, we just look at what we have for the return on earnings. We may not necessarily analyze that because we're pressed for time. So for FBN Holdings, 6.38, for UBA, 8.92, for Access Bank, 8.27, for Zenith Bank, 8.76, and for GT, we have 9.17. Well, on this note, I want to say many thanks to you for coming on the show.
Yes, thanks for having us. If you look at the half-year return on earnings of this bank, they are more than 8.9. Add it to another 8.9 for the second half of the year. That's almost 18. We are close to to inflation. For me, it's good to go.
Okay.
Shareholders will be smiling. Return on their equity.
Yes.
All right. Okay, so Mr. Garba, let's hear you.
Okay, I'm happy to do. It is said all that the returns on the earning is a testimony that these banks, they are doing very well.
Yes.
And investors should invest for this bank because grossly they are undervalued.
Yes, thank you very much, sir.
Thank you very much. That's a return on equity.
Yeah, thank you,
okay, many thanks for joining us on the show. Mr. Charles Pakruha, thanks for coming.
It's always my pleasure.
Absolutely. Thank you for coming, Mr. Omodion.
Yes, we are here to educate Nigerians how to invest wisely. We are doing it.
All right, thank you to Mr. Garba.
Okay, I'm happy for having you.
All right.
Thank you, sir.
Well, many thanks for joining us on the show today. My name is Perpetual Fasami Peter. Do enjoy the rest of the day. Bye for now. Happy weekend.